If the new credit lines lower your overall utilization ratio, you can boost your score in some cases by opening new credit cards. It's better to leave your credit card accounts open and just put these cards on ice. Use that card just a bit to prevent the account from being closed if you get a warning about inactivity from the card issuer. You can also keep that credit card as a backup, especially if it comes with a higher interest rate or a higher credit limit. Keeping this one in the wings can help you keep costs down, and if it has a higher limit, can keep your spending in check. Another option for an older, unused credit card you may have originally got when starting, perhaps as a college student, is to call the issuer to trade to a better product rather than closing the account outright. That way you might upcycle the card to the one you find more useful while retaining your account history. You might have to forego any introductory bonus offers provided to new card members, but it's a better option than simply closing your old account and losing valuable credit history. Charge cards are excellent economic devices of convenience and also safety and security. They are available and useful when you either do not have any cash on hand or do not wish to bring cash when making acquisitions. When making large purchases such as a new TV or major appliance, they can also be quite useful. They are specifically hassle-free when you're traveling and can offer you a variety of travel-related protections such as zero-obligation fraud coverage, shed or stolen card substitute, as well as an auto rental insurance policy, as well as possibilities to make rewards. Payment history on closed accounts eventually falls off your report, which can also hurt your score. Closing credit card accounts also reduces the amount of available credit, which can hurt your debt-to-credit ratio or credit utilization if you have outstanding balances. Getting another card. Credit card companies still solicit people to open accounts even though they've slowed down a bit. You know those mailings you often get that tell you you've been pre-approved for a card. Should you be tempted? Well, sometimes. The following are several potentially justifiable reasons to consider applying for an additional card. Payment background. This is the greatest factor and counts for 35% of your credit history. Although this takes all your regular monthly repayments from all your financial obligation into account, your charge card repayments are the greatest variable. Credit card companies are the least flexible when repayments are late and are quick to report to credit score bureaus if they are tardy. Debt-to-credit ratio. Also referred to as credit rating application, this proportion gauges the outstanding debt on your bank card about your readily available credit rating, primarily just how close you are to the credit line on all your cards. Your credit history application factors right into 30% of your credit score. If it exceeds 30%, the ratio hurts your score. Length of credit history. This is where individuals with several bank cards can get involved in the problem. Developing a responsible background of on-time settlements enhances your rating gradually. Individuals with an exceptional credit reports have an ordinary age of 11 years for every one of their cards. This contributes to 15% of your overall score. New credit score. Whenever you add a brand new credit account, it can trigger your credit score to go down a few factors initially when the lender inquires on your debt report, then when the account is opened up. New credit history is 10% of your rating. Credit report mix. The sort of debt you have counts for 10% of your score. Credit bureaus like to see exactly how you handle financial obligations throughout different kinds of charge accounts. Your credit report profile ideally should consist of a mix of bank cards, retail accounts, installation lendings, auto lendings, or a home loan. Including a lot of brand new cards, when you have a brief credit rating, lowers the typical age of your credit accounts, which can drag down your credit score. How many cards to carry? The number of credit cards you have and how you use them can have a direct impact on your credit score. If you're a novice credit card user, focus on building a credit history with 1 or 2 cards and paying off your balance in full each month. Adding credit cards for specific purposes, such as a good rewards program, or for obtaining better travel-related benefits, can also make sense, provided they are added gradually over time rather than all at once. Secret takeaways. Having too many impressive credit lines, even if not used, can harm your credit report by making you look a lot more possibly high risk to loan providers. Having multiple active accounts can make it extra difficult to control spending and keep track of settlement due dates. Credit scores used beyond 30% of cards, credit lines, and also late payments can dramatically lower credit ratings. Closing older accounts can lower your ordinary age of credit history and also hurt your score. Variables to take into consideration. Several different elements can help you determine the number of credit cards that are right for you. Some individuals feel that a handful of cards, 1 to 3, is quite sufficient, while others wind up opening up multiple cards in time by replying to brand new offer rewards that come their way in the mail or online. Yet actually, the way you handle them, as well as the scenarios under which you obtain them, matters more than the number of charge cards you bring. Dealing with too many cards. If you think you may have too many cards, or have ones you no longer use, the worst thing you can do is start closing accounts without considering the impact on your credit score. Closing older credit cards can shorten your credit history, which can hurt your score. If you've used credit cards for several years, it may make sense to add a card if it has a significantly lower interest rate that could save you money if you plan on carrying new balances, assuming you feel you can qualify for better terms. You may also want to transfer a balance to a new card that offers a promotional 0% April for new cardholders. However, you still need to focus on keeping your debt-to-credit ratio below 30%. Getting a low interest rate. If able to take advantage of a promotional 0% April offer, transferring a balance especially. Compelling introductory bonus and ongoing rewards. Adding available credit to lower your debt-to-credit ratio. If promised in the offer, getting access to a higher credit limit. The bottom line. Having a lot of credit cards can hurt your credit score under any of the following conditions. You are unable to service your current debt. Your outstanding debt is more than 30% of your total available credit. You have added too many cards in too short a time. You lack diversity in your credit accounts, i.e., you don't have other types of credit in your name like a mortgage, auto loan, etc. But don't simply start closing accounts just to reduce the number of cards you have. That can never help your credit score. Instead, pay off any outstanding balances and plan to at least hold onto the oldest card. Plan to keep it along with any other older unused cards in a safe place rather than in your wallet. Then just use it once a year or so to keep it active and investigate options for product trading with your issuer. Yet can you have way too many bank cards? Popular economic wisdom claims having excessive plastic under your name can injure your credit rating. Does this right away beg the question, how many charge cards are too many? Exactly how your credit score is figured out. Before we look at the basics of charge card ownership, it is necessary to comprehend how your credit history is determined. This can aid you to identify whether you carry way too many bank cards or the few that you have are enough. Here's a quick review of the essential parts of your credit history vis-à-vis the quantity of plastic you carry. That said, it can make sense to maintain a primary card to make use of for the majority of costs, and also possibly one or two as a backup or for specialized functions, like using for a certain spending category that is awarded incentive factors or cashback with a specific card. It's additionally crucial to bear in mind that having way too many open credit lines relative to your earnings, even if they aren't used, can make you look potentially high risk to lending institutions, as well as weaken your credit score.